All right. We should be good to go here. Good morning. Happy Monday. Hope you had a good weekend. Hope you enjoyed some football. But let's get diving in here. We got about 45 minutes till the open. All right. So things to get a little bit chippy here last week. But let's look at the market from a weekly charts perspective first, which I think is really important. The weekly trend to me is the most important, and the structure of the weekly trend is important as well. So from that perspective, all we did last week was dip down to the weekly AEMA. And if you look at the last handful of weeks, really the last handful of months here, it's pretty typical of this market. From another perspective, even to the weekly 21, which you haven't gotten out of your S&P 500 since November of last year, even that I think is a good pullback. So with that being said, the weekly structure didn't change at all. And all we really did on the daily chart, pushed off the 21, we got to about +2, and you got your reversion to the mean. So Friday, things did get ugly into the close, but just kind of looking at the chart from a trend perspective, it's just a dip to -1 ATR, which I think is relatively healthy after that big push here into +2. So we're getting a good pop here this morning. The key level here is going to be the 21 EMA. If we can get back above the 21, I think anybody who tried to short this is going to add a little bit of fuel to the fire as the market goes back towards the highs. Under the 21, things could get interesting. So use that, I think, as a key level here. But all in all, not much really changed last week other than what could have felt like a nasty pullback, really just a healthy dip here. So there's no telling where the market goes from here. For conversation's sake this morning, though, let's just assume the trend continues. Right? Looking at our daily chart, we got a bullish trend. There's your flush, and the trend continues. There's your flush, the trend continues. So just for conversation's sake, let's say over the next month, the trend does continue. If that is going to be the case, and again, I'm not saying it is, but just in terms of, preparation of a swing trader, if in fact over the next 4 weeks the trend does continue, then there's a lot of beauty here to the last few days of selling pressure. With that selling pressure, you're going to get a lot of market-leading names that otherwise were extended finally coming back to a buy point. So I think we want to build a focus list from that perspective, with the assumption that the trend is going to continue. Now, I don't think you go in here today and you just blindly buy everything. The thought process more so is, if the trend continues, after we get a big push 2-3 weeks from now, that's not when we want to be looking to get long. We want to be looking to get long down here. So with that being said, looking at a few sectors of interest here, obviously for me, tech is a major focus. And, real quickly here, weekly chart perspective, we dipped to -2 ATR. And from a daily chart, you got your dip to the 21. So within technology here, and I don't think you go in and you buy this today. It's just if 3-4 weeks from now this trend is continued, I think you'll have wanted to pick up a little bit of Apple back here at the buy zone. So got a good trend. Here's your flush. I think you add Apple to your buy the dip list here. And another one I think has to be Google. Beautiful uptrend, stacked DMAs. You still have green 10x bars everywhere. And you finally came back to the 21. So if over the next 2, 3, 4 weeks this trend continues, I think you'll have wanted to pick up a little bit of Google back here at the buy zone. So let's take a look at Facebook. Facebook didn't really dip. Here's Microsoft with a really bullish daily squeeze. So again, if the trend continues, there's a good spot to focus on some Microsoft. So I think we got our bases covered there. Amazon on Friday. Not much of a dip, really. So I would take some maybe at the 21, but not there. But I like technology. So with that dip there on Friday, I think you add some Apple, Google, Microsoft to your watch list. Another group I like is the Semiconductors. However, they were pretty strong here on Friday. Granted, they kind of gave it all up, but compared to a technology who was down closer to 1%, pretty solid stuff here. Now, unfortunately, at least for me, NVIDIA held up like a rock. So I think NVIDIA is crazy bullish here. I would much prefer a dip to the 21. So no such luck. I love the weekly chart on Broadcom, so it's still a little bit too extended. But I will have that on my list just in case it does dip here. And then I do continue to like the daily squeeze here in AMD. So we took really small profits last week just to make sure we don't have any headaches here this week, which would have been expiration. But I do think the daily squeeze is trying to set something up. So I think you can be patient. Potentially, you look for a move back above the 21, but I do like that daily squeeze there. So we can add that to the list. All right. Now we got a couple tech stocks, a couple of semiconductors. Another one of the strongest groups in the market is the communication sector. That's basically Facebook and Google. And we got Google on the list. So we've got that covered. And I would say another one of the stronger trends in the market is healthcare. So healthcare was actually pretty interesting on Friday. The ETF itself just kind of got caught up in the selling pressure across the board and dipped here to about -1 ATR. From a weekly charts perspective, it's kind of closed above your weekly 8. So what's interesting about that is that that held up relatively well, while a UNH here really flushed down to -2. Pretty nasty flush there. It's a pretty heavily weighted stock in healthcare. Another one is Johnson and Johnson. They got biffed down to -3 ATR. So it's interesting from a couple different perspectives. One, though it might not look like it on paper, actually potentially is a sign of the group's strength here, where overall the basket just kind of has a slightly above average day to the downside, where a lot of those leading names were getting hit a lot worse. So there's potential within the group here. You get a few other names bucking the trend. So I would say if you keep an eye on, a Johnson and Johnson. We're going to open up about a buck higher this morning. See UNH. We closed around 403.90. Looks like 406, 408 is going to be the open. After the nasty flush here, I would look at Johnson and Johnson and UNH potentially as a gauge just for XLV. Where XLV, I think, did a pretty fair job of holding up on Friday despite the pressure here. I would imagine, though, if you see another 2-3% slip to the downside for UNH and J&J, it's probably when XLV pulls back even further. However, vice versa, if these names here do begin to bounce, then personally, I think the group is poised to just kind of continue business as usual. So I do like the trend here. I think with that all being said, watch those two names, watch the price action today. Be patient with an entry here because it's kind of at that fine line where you got a little bit of a hit. If those two names begin to bounce, it gets back towards its 21. In my book, pretty bullish. You also could easily see a test of the 50 here. So be patient with XLV, but I do think if you're looking to quote unquote buy that dip, you could just kind of simplify the process and do it on the ETF itself here. So we'll add that stinker to the list. And really outside of that, one more here has got to be Tesla. Got to be Tesla. I think one of the better looking weekly charts in the market, and with a dip here to about the 8 EMA. Let's see, we're going to open up a few bucks higher this morning, 740-ish. The dip to the 21 would be nice. That would be nice. But regardless, I'll be looking for a few entries here in Tesla unless it just takes off today. But I do want to get long and get positioned for what I think is a lot of bullish potential in that weekly squeeze, especially here ahead of earnings in just about a month and change. So we can add Tesla to that list. And really outside of that, that is about it. I do like the financials here. So that's a group to keep an eye on. Let's see how Goldman held up on Friday. Goldman held up pretty well. So I like that daily squeeze. I'll keep an eye on that. And in terms of open positions for us, we've got some healthcare. We got some SQ here. So old SQ is going to have to bounce off of that weekly support at the 21 this week for us to keep the trade. If it can, it should be in good shape. And we're long Home Depot. I think you might want to keep an eye on here. I like the trend in the structure. it held up really well on Friday compared to most other things on the board here. And Snapchat actually held up really well, just kind of chopping in its 21. So there's a few things to keep an eye on, but I think obviously the most important three charts here. One is going to be the chart of the S&P 500. And I think a move through the 21 EMA is pretty bullish. And I think probably starts handing out some spankings to anybody who tried to short. The Q's held beautifully. So, a move back above the 8 EMA is pretty bullish there. And then keep your peepers on the VIX. If you're bullish here or you are looking to buy the dip, or if you potentially did that on Friday, you're looking for the VIX to come back in here today. We've had this discussion before. You're going to get these little bursts in volatility. It's going to shake the tree a bit, so things get sloppy, a little bit ugly. But the key here is whether or not VIX just continues to run, which in that case, the market tends to continue to go lower. Vice versa, if VIX just comes back in a bit, typically the market's going to continue in the direction of that overall trend, which, as we all know, hopefully, is certainly to the upside here. So be patient. I think you have a watch list of things like an Apple, a Google, a Microsoft, Broadcom, AMD, some healthcare, some Tesla, all good looking trends that if the market continues higher, I think you might want to take consideration to buying on a dip here. But if you all have got any questions or anything you want to take a look at, toss it at me here. Because my game plan today, the order of business today, Home Depot and Snapchat didn't really give me any issues last week. So let's see, 3370-ish. Yeah, nice little pop here this morning. So that shouldn't cause any headaches. Let's see, Snap is going to open up about $1 higher. So those have continued to behave. Looks like they're going to keep on behaving here. And then it's just more so keeping a closer eye on XLV and old SQ over here. Let's see. Bid in the ask is just around 134. Which will move back through 134. And this daily squeeze is just daily squeezing. Just how I like. And yeah, this is our misfit right now. If the weekly chart is who we thought it is, that's where this bad boy should hold. But yeah, I'm pretty excited here. Reason being is, and again, I hope no one gets off the call here this morning and just starts buying everything. We could easily get rejected this morning and just puke it up. So I'm not coming in looking to pull the trigger. However, if the uptrend continues, you generally, I think, should be jumping for joy once you get a nice little reset. And I talked about this in the YouTube video. I think we talked about this probably a lot last week. But the beauty in this, right, shakes out the weak hands. Now notice we're going pretty far back here. Right? It's gonna happen. But the beauty in that is that it shakes out the weak hands. But with that flush also comes the opportunity for your next, really solid round of trades. And what I mean by that is, just kind of quickly recap the YouTube video. Once a market comes in and you're setting up at the 21, if you have a squeeze, I think it's a huge bonus. But when the market is setting up there at the buy zone and it's getting ready for its own push into 2 to 3 plus ATR, that's when you want to get busy, right? That's your window of opportunity to go find those good looking setups because you got the wind of the overall market at your back. So when you look at our book of work here in the mastery, keep a visual in mind of that chart of the overall market and look what all our winning trades have in common. Facebook was setting up when the market was setting up, and Facebook took off when the market took off. It's a huge correlation. That daily squeeze in Apple is awesome. But when the market is getting ready for its own move to the upside, you got all the wind at your back. So when you can identify that the market is potentially gearing up for that move, go look for an Apple, go look for a Facebook. They're all moving here at the same time. So we're a huge fan of the squeeze. The timing component here with the market is huge, right? So that was the only reason, realistically, we hit in all these trades here. They're good looking squeezes, good looking trends, of course, but the beauty here of Facebook, Apple, and NOW, and XLC, and IYR, and Tesla, you had the wind at your back. So with that reset, that little flush in the market, potentially, again, if this trend continues, there's your next solid round of trades. But that's the key. You look for those setups when the market is setting up. With the wind at your back, you're taking profits into that momentum. Then I'm just a fan of once the market's up here at 2 ATR, don't put your foot on the brake. I would more so say take your foot off the gas a little bit. Just begin to coast. Take fewer trades. Take smaller position sizes. Give your trades plenty of time. The last thing that you want to happen to your account, and most importantly to your headspace, is that when the market finally gives you that reset that could give you your next 10 profitable trades, you're taking all kinds of profitable and emotional damage. That only happens if you keep forcing the issue and you keep taking big trades and you keep buying weekly expiration calls. There's a lot of beauty here to the flush if the trend continues. So when you scale down a little bit, take fewer trades, give them more time. It's in an ideal world, it's probably going to look how things are looking for us right now. You've taken 4 trades when the market was extended. 2 of them, they look pretty good here. I think we're in great shape. Another 2 of them, XLV might be just fine here. It may be SQ is the dud. That ideally is what it looks like for you on the way down. And if you think in terms of probabilities, say you become one of the better traders in the world, you're probably going to have a 60, 70-ish% win rate. More likely than not, you're going to take your losing trades when the market comes in. Obviously, an individual stock can fall while the market goes higher, but generally speaking, this is when you're going to take your losing trades. So make sure you're bringing home the profits here, and it's okay to give a little bit back there because you're going to make way more on the way up, and that, at the end of the day, is playing an uptrending market. So see what y'all got for questions, but there's a few thoughts for you. Who do we got for Monday Night Football tonight? There's a question I got for y'all. All right, let me get caught up in the chat here. What's up, Terry? Good morning, Terry. Beverly, glad you enjoyed the video. Good morning, Warwick. Morning, David. Eric, Andrew, Miss Amelia. Mohammed, Starbucks. Let's take a peek here. I think that's another one I'm probably waiting for a dip in. Let me clean this up a little bit. I would be a buyer of Starbucks here on a dip back to the 8 or the 21 EMA. I like your daily squeeze. More importantly to me is where that daily squeeze is taking place. So your daily chart is building up energy, potentially getting ready to release energy inside of a bullish weekly uptrend and a weekly squeeze. The potential power here is that once that, Mohammed, once that daily squeeze fires, it could just trigger the weekly squeeze. Kind of like over here. And that's when things can get a little bit silly to the upside. So if I could get one more dip here because of that weekly and that daily, I would definitely be a buyer. So I should actually have that on pullback watch list as well. Chipotle is another interesting one here. Really bullish weekly chart. And you got a killer daily squeeze here. So not much for me to say bad about Chipotle. Great uptrend. You guys can see all the green 10x bars here. So the monthly, weekly, 3-day, daily charts still, got bullish momentum increasing, as does your 4-hour chart. Yeah, you got squeezes everywhere. You got an uptrend. You got momentum. I like Chipotle for sure. That looks really bullish in my book. Money Eat. I'm already long Snapchat, but if I weren't, I would certainly be looking to get long in this range here. And I'd even be comfortable holding through a dip to the 50. So I really like an entry on Snapchat anywhere within this range here, +1 to -1 ATR. But I do think, compare that to an Apple, to a Google, to a lot of names on Thursday, Friday, really held its ground. So it's not to say it has to take off if the market bounces. I do like the odds, though. So I'm a big fan of the snapper here. Eric, IPG. It pulls back, makes it back towards 21. Let's check it out. Yeah, I would say so. Good trend. Eric, I would say so because, clearly we got a bullish weekly trend here. And look where you held. Very much like the S&P 500. So, there might have been a little bit of noise last week. But in terms of your weekly chart, you just held firm where you should hold firm. So, with that in mind, and then a bounce back above the 21, I think you could get some continuation there. Jason, I like Crocs. Now, earlier on Friday, it was trying to wiggle off without me. You know what? It came back a little bit, so I like it. And for me, it's just about that combo of the big three. Trend, which I'll look at a weekly chart usually. Obviously, that's a beautiful uptrend. So you've got trend. You have structure, and structure for me is a squeeze with positively stacked EMAs. And then look at all these green 10x bars. There's your momentum. So trend, structure, momentum, squeeze action. I like it very clean. It was trying to go here on Friday. Another name, held up pretty good. Easy. I've been watching BNTX. I like it here. One of my rules, though, is I can't take a trade until the EMAs are stacked positively, which just means your 8 EMAs on top of the 21, on top of the 34, on top of the 55, on top of the 89. In plain English, there's a lot of bullish momentum and structure. That typically leads to a solid push. So that's really the only thing I'm waiting on here. Hey, good morning, Ryan. Yeah, let's take a look at Vive. All right, so daily chart is firing daily squeeze here. So that potentially is the path of least resistance. Well, the weekly chart is. See how this makes a bit more sense, right? Where it's like you look at it as from a daily perspective. It's like, man, this thing's just kind of getting slapped around here. Now, Monday through Friday, certainly. But what do we know about the market? Builds up energy at the 21 EMA. It makes a move away from the 21. Now, that's an above average move. More often than not, it could be a 2-minute chart. It could be a monthly chart. The ebbs and flows of the market, we build up energy at the 21, typically push to about 2 to 3 ATR. And then what do we typically do? We come back home. Now, the key here is we have no clue how long it's going to take for it to kind of catch its breath, rebuild. But from that perspective, the recent selling pressure here makes a little bit of sense. Killer push off the 21. You got to about +2, and you're pulling back to the 21 here. So that doesn't really give us too much to work with right now. So I'd be a little bit patient. I certainly wouldn't short it here. Not at 2 ATR. Just like I wouldn't get long at +2 ATR. So really, Ryan, at least with my style of trading, I would say there's easier setups out there. But I think if you begin to find some support, it's a weekly pullback it kind of needed. Down the road, that uptrend should continue. AA Ollie, Nvidia, Netflix, and Moderna. So I think Nvidia is crazy bullish here. That's just not where personally I want to take my entry, not for a swing trade. Now, admittedly, I know that means it is likely just going to continue to go higher, and I would take a dip to the 21. So I probably am going to miss the next move higher, but just not where I like to get long. And then for Moderna, a good example of I would get long here and then take profits on this push into 2 to 3 plus ATR. So at this point, I'd be waiting for the next pullback to try to get long. And Netflix is an interesting one. I would love a nice flush here on Netflix because I kind of want it to prove itself. What I mean by that is you had a weekly squeeze that took over a year to set up here, and you're finally getting a little bit of traction. Nice bullish momentum. The weekly squeeze is officially fired. What I want to see is one more flush. And then I want to see is whether or not that flush holds support above that previous range, or if Netflix just kind of throws in that towel and falls right back inside that mess. If it falls back inside the mess, in my book, it's a failed breakout. If on that first day, 2 days of real profit taking, it holds firm above that level, then I'm looking for a legit trend. So I would like to buy that dip there as well. To give you a level, who the heck knows? I'm just waiting for a little bit of a flush. If anybody ever takes profits here. David, so I don't take exits under the 21 EMA. I do know that JC does that. I more so look to take exits. Put it this way, the discussion begins. It's like, hey, it might be time to cut this trade off, or let's start having some discussions here under -1 ATR. So I do know that for JC, I think he takes an exit when there's 2 closes under the 21. I like a bit more pain, so I wait for the move under -1 ATR. And then there's a few discussions. So I'm just going to walk you through SQ, and kind of take you through the discussions here. So we don't even have any discussions about taking the trade off if we're within +1 to -1 ATR. It's just a daily squeeze doing its thing. So we don't care about that. Once we start breaking under -1, that is when the discussions begin. And in terms of the discussions, the first thing to take into consideration is how have we been trading as of late? And for us, we're coming off a good round of 10 or so trades. And if this trade goes to crap, is it going to wipe away all those gains there? That's our first and foremost thought. If this thing gets ugly, are we going to give back our last 10 trades? And based on the position size here, that's not going to happen. And based on where we are in terms of the loss, that's not going to happen. So that's the first thing we take into consideration, because that's the last thing we want to let happen. We start wiping away weeks of progress. So we get a gist of that. Then the second thing I take into consideration is how much time left till expiration. If this thing's got 3 to 5 days left to it, let's just cut it off and move on to the next one. If we got 30 plus days here, then I want to look at the weekly trend. Because what I've learned the hard lesson a couple times this year is I don't want to be getting shaken out and taking losses on a pullback into weekly support, which for me is typically the 21 EMA. So to show you an example of getting shaken out on a completely normal dip into the weekly 21 is Yeti here, which, by the way, one of you called this out. I like Yeti here. But this was very similar. We're in a daily squeeze. It starts breaking -1. Because I had plenty of time left, the first freaking thing I should have done was look at a weekly chart. Because to me, the weekly chart holds value over everything else. And what I should have looked to see is, are we breaking below weekly support? Are we a good 1.5 miles above weekly support where I'm not trying to sit through that? Or is what might be a little bit ugly here in the short term on the daily chart nothing but a buyable dip to the weekly 21 EMA? Because that's all that was. A little dip to the weekly 21. So looking at the weekly trend, that's a pullback I want to buy almost every single time in a stock that has green 10x bars, stacked EMAs, and is squeezing all over the place. So I do think that's something a lot of you should start to take into consideration. Now, if I'm getting long Yeti up here, all right, well, I'm not trying to sit through a dip to the weekly 21. That's a bit much. But if I'm getting long there, that's a little silly to get shaken out of. So when we look at SQ here, because I learned that lesson, it's like, hey, before we get shaken out, let's go look at a weekly chart. And sure enough, it was a dip here to the weekly 21. So it's going to be different trade to trade as far as the management of it. Say the weekly 21 EMA was down here. We're jumping ship. We're not going to sit through that. But that is one thing I've learned, again, the hard way this year, is quickly check that weekly chart. And make sure the flush you're sitting through isn't just a dip to ideally a level that is a swing trader I would want to buy. So that's what we're doing with this bad boy. But that discussion begins, and those various things get taken into consideration on a flush under -1 ATR. So something like a Snapchat here, haven't even had the discussion, haven't had a reason to. Something like a Home Depot. Like, hey, these are great. These we don't even gotta watch here. All right, you're still getting caught up here. Mangala, that doesn't do me any favors. That means prices are only going to go up for the Corvettes and the Ferraris. We got Ravens versus Raiders tonight, huh? I can't say I got too much input on that one. Money, let's check out Disney here. I know Disney's got a quite the looker here for a weekly chart. Yeah, that's pretty solid stuff here. I like your weekly. So you got trend, you got structure, you got a squeeze, and I would like to buy a dip here on the daily chart to try to latch on to the old mouse here and catch that weekly squeeze, potentially getting a little something going here before earnings in early-ish November. So I like Disney. It's a good weekly structure. It's just a matter of where do you want to pick your spots on that daily chart. I'd rather not sit through that dip, so I'd rather wait for it. Hey, good morning, Ashley. So for me personally, I typically like to give my swing trades a good 30 or so days to expiration. And 99% of the time, I'm going to sell a put credit spread. Personally. And there's my man Jay-Z. John, would I buy some more Snap? You certainly could if it fits your risk parameters. I'm not sure if I'm going to, but again, if I didn't already have a position here, this completely fits the bill of what I'm interested in. Daily squeeze, a lot of momentum, histogram just turning positive. That's a trade I'm cool taking a loss on that. When I take losses, I want it to be on that kind of setup because I like the numbers over the long run there. Can we use technical analysis to predict NFL games? I wish. I'd be looking for what team is in a squeeze. I like Oracle. The only reason I haven't been long Oracle, I would have loved to have been collecting some premium here, is earnings are today, after market close. So with any luck, it opens up flat tomorrow after earnings, and then potentially look to take the daily squeeze, which I think is one of the better ones in the market here. Really steady uptrend. So we'll have to see how that goes. It's been sitting here egging us on, though, because it does have close to, picture perfect structure there. Warwick, DGX. How are we doing on time? We're doing good. There's your uptrend. So there's your pullback that you buy if you're looking for that trend to continue. Weekly chart looks good. I like the mindset, Warwick. Without weeks like last week, which, again, let's kind of take this with a grain of salt. We dipped to -1 ATR on a daily chart. So, to call that a legit pullback, I don't know about that. The day we start heading towards a 200 SMA, then we got a pullback on our hands. But with that comes names like this, just a really solid uptrend, finally giving you opportunity to get in. So there's so much emotional damage and frustration and anxiety around these pullbacks in the market. If we didn't get them, though, it's like we got nothing to do here. So again, there's some beauty to what might look a little bit ugly. Hey, good morning, Shane. COP? Pop. I got Mrs. Officer by Lil Wayne on right now. Good timing. So let's check it out here. Let's take a peek. So there's your weekly squeeze. There's your daily. Yeah, you do have squeezes everywhere. And you're above your weekly 21 EMA. Now, I wouldn't be able to trade it here just yet because I need positively stacked EMAs. But based on that weekly support, I'd like your daily squeeze. Just a major thing to keep in mind here is if we look at the weekly, it looks good, right? It's solid, but it's not packing a bunch of bullish momentum just yet. What I mean by that is if you look at the 10x bars, they're yellow. So the momentum here is just more so neutral. If you look at the histogram, momentum's actually going the wrong way here. Now, this doesn't mean that this weekly squeeze fires to the downside. What it currently means, though, is that much more likely this for the next week, 2, 3, 4 weeks could be liable to chop back and forth in this range just like it has. Now, you have to take that into consideration because a lot of times trying to make something happen on a lower time frame, when the stock is really just caught in that weekly consolidation, it can be difficult. What I mean is, hey, here's a good looking daily squeeze. It's getting ready to go here. It's just kind of fallen victim to the chop fest. That is a weekly squeeze. So keep that in mind. To compare that to say a Tesla here, your histogram is starting to turn positive on your weekly chart. Momentum, the moving averages are starting to curl up a little bit. That's the kind of thing where that daily squeeze has got some potential to get you going there. So that's the only thing I would take into consideration. Jim, be safe on the road this week, but it's a good plan. Nothing wrong with that at all. Especially on the road. I hate having the babysit positions if I'm on the trip or whatever the case may be. We didn't check. Well, yeah, we checked Google. Oh, we checked Google, all right. One of your stronger trends in the market, and here's your dip to the 21. So remember, these pullbacks here, it's all about the indexes. If the QQQ and the S&P just continue to sell off here, then buying the dip on Google isn't going to work. The focus, at least for me at the moment more so, is if this trend continues, are any of the strongest names in the market pulling back with it? And Google is an example. So personally, what I don't see is that for the next 30 days, again, for conversation's sake, but for the next 30 days, the S&P continues its trend, QQQ continues its trend, XLC continues its trend. I don't see Google not going back into new all-time highs. So you don't go in here today buying everything hand over fist. You more so have that watch list ready so that you're not like the average retail trader in 2 weeks from now after we have rallied to new highs. Now you're thinking about getting long. You don't think about getting long up here. You're bringing home your paychecks up here. Here's where you build that watch list. Here's where you get ready. And Google is finally back at that point. So I like that dip a lot. I do. Brian, thoughts on the upcoming market events? To be honest with you, brother, I kind of live in a bubble. I got no clue what's going on out there. Whether it's Fed related or whatever the case may be, I've got no clue. I got no clue. So really, I live in my little bubble, and it's tough for much to get in here. Reason being is I want the charts to tell me everything. I want the charts to tell me everything. Now, maybe the flush, maybe the rally is Fed driven or news driven, but I've just found over the years, me being me and the way my personality is, if this is the space between my ears, like I'm much better off if it's like squeeze, 21 EMA, put credit spreads, like, and everything else just kind of bounces off there. So I like to let the charts tell me what's going on out there in that world of ours. Draco, if you search put credit spreads on my page, you're going to find a lot of good content. Typically, for me, I'm looking for a 2-to-1 risk reward ratio, meaning I'll risk $2,000 to potentially make $1,000. Now, in terms of, that's best case scenario, worst case scenario. In terms of how I like to manage the trades, I keep it a little bit closer to 1-to-1, meaning I'll, risk my $2,000 to make my 1,000, but ideally I'm going to take the trade off for a loss once I'm down about 1,000. That way, I'm trying to, operate more so in a 1-to-1 risk reward ratio fashion. That way, with a decent win rate, you can move the ball forward. And even better if you can keep your losses a fraction of the max potential profit. Guys, JC is a man of many tricks. So, what makes JC, I think personally, the best, or one of the best, is he's been through so many different market environments. He's just got such a good feel for where we're at in the trend, in timing, etc. He kind of can reach into his, toolbox, so to say, and just take out whatever strategy best fits that environment. Sometimes it might be an out the money debit spread where he's risking 2% of his account to potentially grow it by 10%. There's other times he might risk a 4% on a 4-to-1 risk reward ratio, out the money put credit spread. So for him, it really does vary. And that is one of the cooler things to be able to watch. Tyler, I like Goldman. So it really is just that simple mindset. When you get a pullback, it's like, all right, thank you, market. Been sitting here for weeks now. Keep it that simple. If this uptrend in the market continues, what are some of the stronger sectors? What are some of the strongest stocks in those sectors? And if they look like a Goldman, a daily squeeze at the 21 with stacked DMAs and green 10x bars, part of a group that I think has a solid trend going. Again, if the trend continues market-wide, I don't think Goldman just gets obliterated here. I think it continues. That thought process is going to work for us until the day comes where our dip leads to a reversal. And then it's a different game. But the way I look at it, I suppose, does it matter? Like the one day we all come in here and try to buy the dip, and then the market reverses, and then we're in a short-term downtrend. At this point, does it freaking matter? Meaning we've all likely been kicking butt here on this entire trend, right? We're looking all the way back last year. We're missing 6 months of this bad boy. It's only going to matter if you're betting the ranch up here. But in terms of playing the trend in the market, that is a good perspective. It's like at some point, you've put aside enough profits here, you start buying every dip. And then the day comes where that doesn't work and things roll over, you get back a little dent, a little morsel, so to say, of what you made on that last 12-month rippage there. Anthony, thoughts on IWM? Tough one, right? And again, it's like, why have I been having such a tough time trying to get trades going off this daily chart here? It's trapped in a weekly squeeze. I feel like I can write a whole book for myself just on what I'm learning this year about weekly squeezes. We've tried shorting this thing twice when everything for a short was lining up. But what has it done for the last 5 months here? It's chopped itself silly inside of that weekly squeeze. So I'm just learning more and more. For me, that's tough for me to work my edge. All right, we're opened up here. So let's see. Do the shorts get spanked or do the shorts bank? The ticks open up at 1,400, so that's probably going to be your high of the day there for the ticks. All right, let me take a look at my shitlins here. Tesla. All right, so healthcare is trying to bounce back in the zone. Snapchat's popping a bit here. Home Depot looks solid. And SQ's the one we got to keep a leash around here. Right at that old weekly 21. All right, y'all. So we are live now. So let's see what today's got in store. So there's your key level for the SPY. All right. I think you'd be a little bit patient to see what the scoop is here, if we actually hold at that 21 or not. You know, from a structure perspective, we close today, we close tomorrow above the 21. That kind of structure, at least to me, kind of implies you're just going to see shorts get smacked around here. The Qs hold firm, and then the Dow was the real laggard last week. You know, so a move back to and through the 50 here over the next few days of the Dow. That, I think, you have your whole market back towards the highs. All right, Tesla, Apple will pop here, Facebook, Googster, Microsoft, Snapperoo, Home Depot, LV. All right, y'all. Good stuff, though. Good stuff. Let me see if I can do a few more questions here. Andy, there's not really a particular time. I would say, especially after a little shakeroo like that, probably to your benefit to wait for a bit. If the market goes back to new all-time highs, I'm okay with getting in here and then catching the rest of that rip, if that makes sense. Just I don't gotta be the first fella to buy the dip. Maybe just one of the first 1,000 or so. Snapchat, Home Depot here. Come on, sucker. See if Tesla can dip a bit more. But yeah, there's your chart to watch. Just the further and further VIX comes in here, the more likely it is the market holds this bounce and potentially just continues to bounce a bit higher. See what happens. We get our first test of zero here for the ticks, though. Let's look at a few names. Starbucks, SQ, Snapchat, Home Depot. Walmart's one I've been keeping an eye on. It's a little sloppy here. Goldman looks really solid. That's XLF today. XLF is solid. XLV is solid. Tech is up 1%. The semiconductors are gapping on up. Utilities are popping. UN Energy's up 2% here today. Real estate's popping. And communications. So, looks to me, my friends, to be a market-wide pop. But let me cut y'all loose here. If I didn't get to everyone's questions, my bad. But let me let y'all go now. That way I can go jump into the mastery and see what's up in there and start laying out a game plan. But I appreciate you being here this morning. I hope generally what we talked about today makes sense. It's not really rocket science. It's just more so if-then kind of thinking. If the uptrend continues, then it's in our best interest to build a watch list of the best-looking stocks in the market that have also pulled back. Do that now, not potentially a week from now after we're back at all-time highs. So I appreciate y'all being here. I'll see you again on Wednesday morning. And for those of you in the options room in the mastery, I'll see you in a few minutes. Thanks, everyone.